Well, good morning and welcome. Another day of trade, another week that's ending up today. But we'll quickly take you through global markets. That's where we start off. But to introduce, that's Ankita Saxena and I am Harsh Saita, and we're going to take you over the next 1 hour through what's happening in global markets and what to focus on in Indian markets. So, Ankita is going to start off with the global markets.
Good morning to you, Harsh. Well, I see a sea of red all across the US and European markets. Now, a jobless claim that came out yesterday was lower than expected, indicating that the labor markets are pretty resilient. And, despite Fed's effort to stifle demand for workers, it's really not working on the labor market. It remains resilient. Also, the hawkish commentary coming in from the Federal Reserve Governor Lyle Brainard, who said that she sees the rate hikes ahead even with the progress on inflation. Now, on the back of that, the market ended with cuts. Dow Jones Industrial Average fell 252 points. The S&P 500 lost 0.7%, and the Nasdaq Composite dropped almost 1% in trade. Now, both S&P 500 and the Dow fell for a straight third session of trading, the longest streak of declines in a month. Now, look at the European markets also. European markets also retreated, tracking the weaker global cues that came in. The pan-European stock 600 closed down 1.5%, with tech stocks shedding 3% to lead the losses. All the sectors and major bosses also finished the day in the red. DAX and CSE down more than 1.5%, and FTSE was down 1% in trade. So all the markets ending with cuts. What about crude, Harsh?
Well, yes, crude's the bright spot, at least today morning, Ankita, and that's on the back of a couple of things that's happened. It's the second straight week where US has actually built up on its crude stocks. So you've seen a good build-up in US crude, especially on the US storage side of things. And when we're also talking about China, the China reopening has led to Chinese demand coming back, and it's come back by quite a bit. November, the demand was at 15.4 million barrels per day. It's gone up by 1 million barrels per day, and you can see that impact on the crude prices. WTI oil up 1% and Brent up 1.5%. Let me just mark out the rates very quickly. So WTI is currently above that 80 mark, in fact just below that $81 a barrel mark, and we're seeing Brent just below $87 a barrel. So we're seeing a little bit of a rally there in crude, especially given the commentary and given the employment data. That is a positive of sorts in a way, if I can say.
All right, harsh rally in the crude oil prices. Well, the events to watch out for today would be definitely the earnings. The focus is on the earnings season that's going on. So we have an RIL, we have JSW Steel, HDFC Life, Coforge, L&T Mindtree, Bandhan Bank, all coming out with their Q3 earnings today. And tomorrow is Saturday, but we have ICICI Bank, Kotak Bank and Ultratech Cement that will be coming out with its Q3 earnings.
Well, yes, and let's talk about a little more about what's happening on the US macro side of things. The Federal Reserve Governor, Lyle Brainard, one of the governors of the Federal Reserve, said on Thursday that interest rates need to remain high, even though there are signs inflation is starting to ease. Echoing recent comments from her fellow policymakers, Brainard insisted that the Fed won't waver in its commitment to taming prices. Her comments come less than 2 weeks before the FOMC meeting. Critical there.
And speaking of some hawkish commentary coming in from JP Morgan Chase CEO Jamie Dimon, who believes that interest rates could go higher than what the Federal Reserve currently projects as inflation remains stubbornly elevated. Dimon said that the recent easing on inflation comes from temporary factors like a pullback in oil prices and a slowdown in China due to the COVID pandemic.
Well, yes, and the US government hit its $31.4 trillion borrowing limit. This was amid a standoff between the Republican-controlled House of Representatives and Democrats. Treasury Secretary Janet Yellen also informed congressional leaders that her department had begun using extraordinary cash management measures. This could stave off default until the 5th of June.
And the US consumers are still in good pretty shape even after the Federal Reserve raises interest rates to tame inflation, according to Bank of America CEO Brian Moynihan. He also said that the US economy could enter into a mild recession later this year or next year. Bank of America is balancing its staffing and compensation levels.
Well, and US streaming giant Netflix said it ended last year with more than 230 million global subscribers. Netflix also announced that co-founder Reed Hastings was standing down as CEO, ending a 2-decade-long leadership.
And shares of Nordstrom fell after the department store chain said it was hurt by weak sales and a lot of markdowns during the holiday season. The retailer said the net sales for the holidays dropped 3.5% compared with a year ago.
And Vice Media is restarting its sales process after earlier interested bidders balked at the initial price tag, according to people familiar with the situation. The digital media company, which was valued at $5.7 billion in 2017, is now likely to fetch a price of below $1 billion.
Well, with that, it's time to slip into a short break. You don't go anywhere. There's lots more news coming up on the domestic front on the other side. Welcome back. You're watching Market Cafe with me, Ankita Saxena and Harsh Saita. Let's quickly get you up to speed with all that's happening at the World Economic Forum in Davos. Now, we heard from Sanjeev Bajaj, the chairman and MD CEO of Bajaj Finserv, who says that the emerging markets have a big opportunity to make a mark in the global supply chain and that progressive policies will make emerging markets stand apart. Listen in to what he had to say.
An important thing to keep in mind, building supply chains, especially in manufacturing, takes years, if not decades. So nobody's leaving China. But because of what's happened over the last few years, incremental capacity building is where emerging markets have a huge opportunity. And you will see a reorienting and a rebuilding of global supply chains over the next decade or so. But it's very important that emerging markets have stable and progressive and transparent policies. Because if you're going to see new companies, new investors coming in, for example, Apple came into India just 3 years ago, is already doubling production every year, making it one of the largest bases for iPhones and now adding computers. But they want to make sure that the next 10, 15, 20 years, policies will be stable, progressive, and emerging markets will have to compete with each other. So I think that's something very important to keep in mind.
Well, yes. Also listen in to Dinesh Khara, who's, of course, SBI chairperson, speaking at the session on financial inclusion beyond access at the World Economic Forum. Quickly, let's listen into what he had to say.
Normally, when it comes to all these various correspondents, we allow them access to an intermediary core functionality, and when we offer them the access, we also ensure that there should be adequate firewalls which they must be observing always, and we can have an oversight on what kind of firewalls are there, and that is something which is helping us in ensuring, because what you mentioned is very important, because unless and until there is a credibility of these intermediaries, the confidence level of the larger population will always be a matter of question. So I think it is very incumbent on the part of intermediaries and also the institutions who are involved that they have to create an ecosystem which is absolutely secure. It is not merely that. It is not merely the digital ecosystem, but also there is a need for having an adequate oversight on the functioning of these correspondents also, so that they should not somehow get into an activity which can shake up the trust of these larger populations.
Well, moving on from Davos, It's a big setback for Google in India. The Supreme Court has refused to stay their appeal against a 1,300 crore rupee fine imposed by the Competition Commission of India. Remember, the CCI had found the company guilty of exploiting its dominant position in the Indian mobile market, but Google had challenged that decision in the top court. The apex court has given Google a week's time to comply with the CCI order. My colleague Raksha Behani is here with more details. Let's take a look.
Well, yes, in a big breaking that we are tracking here on ET Now, Supreme Court has declined to interfere with the NCLAT order, which was refusing to stay CCI or the Competition Commission of India's penalty that it had imposed on tech giant Google worth 1,338 crores. Now, what Google has said about it in an earlier blog post also, and it continues to stand by it, which is this, that if they were to abide by CCI's order of not just paying penalty, but also taking other routes that CCI had recommended, then it will actually be putting the entire digital ecosystem of the country, or the 97% of the smartphone users who use Android phones, at fault. Now, what will happen is that devices that have been built on incompatible forks will then prevent Google from securing those devices, because this is what CCI has said, that Google is taking undue advantage of its market dominance, and that Google should allow other app stores also apart from Google Play Store to be functioning on Android smartphones. The point that CCI is making is that because Google is taking undue advantage, it is putting other Indian apps at risk, or at sort of at an incompetent advantage, because now apps such as Map My India, which could have otherwise been a good digital mapping app, it does not get that kind of exposure because of the pre-installed apps such as Google Maps that any Android users will get on their phones. Now, what Google has said is that while they have been asked by CCI to at least pay 10% of the entire penalty amount within the first 7 days, they have again warned that if the CCI's orders were to be followed, then app developers will actually now have to pay higher costs, and they will no longer have the level playing field that they today have with Android, and larger developers who can actually support a wider range of incompatible forks will be able to dominate the market based on their scale rather than the quality of their product. But what this also means is that 1,338 crore penalty that CCI had slapped on Google last year, now Google will have to end up paying that entire amount, and as I said, 10% of that in the first coming 7 days.
Well, absolutely. Focus straight on Google there, but we'll quickly slip into a very short break with the Nifty, SGX Nifty indicating an absolutely flat start, as flat as it can get, Ankita, but we'll slip into a very short break. Of course, more on the other side.
Welcome back. You're watching Market Cafe. Let's quickly look at the lineup of eminent guests that we have for you on the market. We have Abneesh Roy of Edelweiss Securities, now known as Nuvama Group, at 8:40. We have a 9:40 guest as Saur Mukherjee on 9:40 for the multi-bagger ideas for 2023. We have Pinakin Parekh from JP Morgan on commodity upcycle resuming. We also have Amit Chadda of L&T Technologies on the earnings. We have an exclusive from Davos with Vijay Shekhar Sharma. Do not miss that out. We have Nalin Gupta from Infra Projects Limited on the earnings. We have Anil Rai Gupta of Hevels. We have Nitin Rakesh from Emphasis on earnings with ET Now.
Well, absolutely, Ankita, power-packed lineup there for our viewers going forward. But we'll quickly start to unwind this show. Let's go straight to Lisa. Good morning, Lisa. She always gives us all the stocks that are in news. So, Lisa, tell us about what stocks to watch out for today.
Well, good morning to all. Starting with the Sun Pharma, they have entered entered into a definitive agreement to acquire Concert Pharma, and that will be at a cash consideration of around $576 million, and that amounts to around 4,000 crore INR. The acquisition is expected to be completed within this quarter. Concert's lead asset is duroxolitini, which has completed 2 global phase 3 clinical studies, and it is potentially the best in class for the treatment of alopecia. Well, the street is of the view that this deal will strengthen Sun Pharma's global specialty portfolio, and given the unmet market need, the limited competition, and the likely best in class profile, Duroxo can have strong sales potential. Moving on to Jubilant Foodworks Limited, they have provided a medium-term outlook. They'll be adding around 250 stores for Domino's in the next 12 to 18 months, and they have lined up 900 crore capex, and that will be funded entirely through internal accruals. The capex will be towards stores, towards reimaging and maintenance capex digital of about 500 to 600 crore, and 300 crore is lined up for commissaries. They have also updated on the Bangalore commissary, where they will entail a capex of around 250, which is the plant investment, and that is expected to be operational by Q1 FY24. Moving on to BAIL, they have bagged order for renovation and modernization of steam turbines at Ukai Thermal Power Station in Gujarat, and that is valued at rupees 300 crore. Surya Roshni has also received orders amounting to around 147 crore for API 5 grade coated pipes from local and powder coated GI pipes from GAIL. Well, the other important nifty earnings today are HDFC Standard Life, JSW Steel, and Reliance Industries. These stocks are expected to be in focus today.
Well, do keep an eye out on all these stocks that Lisa mentioned, but we are not letting Lisa go away sooner. But Lisa, take us through the brokerages note that have come in. What are the brokerages saying this morning?
Yes, surely. JP Morgan on HUL, they have maintained an overweight on the stock at a target price of 2,800 per share. Well, they say that the rural narrative that has improved, but the overhang remains on the royalty increase, the 80 bips increase in royalty and central services that could weigh in the near-term stocks sentiment. On that basis, they have lowered the EPS guidance for FY24 and 25E by 1 to 2% to build in the higher royalty rate, and they have raised FY23 EPS by 2% to account for strong Q3. Jefferies has also maintained a buy on HUL at a target price of 3,100 per share. They say that the royalty hike is a complex matter, and on that basis, they have slightly lowered their EPS estimates to factor in the higher royalty rates. Moving on to Asian Paints, Jefferies has maintained and underperformed at a target price of 2,570 per share. They say that the margin outlook is better, but the looming risk remains on the competition. The flat volumes were due to extended monsoon, shorter Diwali season, and pre-stocking that has resulted in EBITDA miss. And also the management highlighted that they are cautiously optimistic about the volume pickup. So all in all, they say that the Asian Paints is a strong player. However, the looming risk remains on the competition. So these are all on the brokerage radar for today.
Right, Lisa. So thank you so much for all of those, for a lowdown on all of that. Let's quickly move on though. Vedanta will transfer its international zinc assets to subsidiary Hindustan Zinc, and that's for a consideration over 24,000 crore that will be paid. The transaction is to create substantial synergies for Hindustan Zinc. Samit, my colleague, joins in with more details on that.
Well, if you see Hindustan Zinc and Vedanta, both these counters would remain in focus. Now, Hindustan Zinc had reported its Q3 numbers, which were pretty much in line with what the street was expecting. But other than earnings, there were a few more announcements that came in, which would keep both these stocks in focus. Firstly, Hindustan Zinc will be acquiring Vedanta's zinc international assets for close to 2.98 billion US dollars, which is close to 24,146 crore rupees. Along with this, Hindustan Zinc will also be paying an interim dividend of close to 13 rupees per share, which will also benefit Vedanta. And going forward, Hindustan Zinc will be paying around 2% of its turnover as a brand fee to its promoter, that is Vedanta. So this is again going to benefit Vedanta and could be negative for Hindustan Zinc. Now, on the acquisition, if you see, the deal value is 2.98 billion US dollars, and this acquisition is expected to complete in the next 18 months. Now, 80% of the amount will be paid by Hindustan Zinc to Vedanta post the shareholders' approval, and the balance will be paid within the next 18 18 months. Now, according to analysts, the deal is valued at close to 15 times its EV to EBITDA, which is quite expensive given the fact that Hindustan Zinc is currently trading at around 8.4 times its EV to EBITDA, and analysts were valuing this Zinc's international asset for around 5 times EV to EBITDA when it was a part of Vedanta. Now, the bigger question here is that will the public shareholders actually give approval to this related party transaction? Well, most likely they will get the approval because government holding stands at close to 29.5%, which is classified as a public holding, and the government nominee on board has actually given an approval for this transaction. So most likely this transaction is expected to go ahead.
Well, thank you for that, Samit. Moving on, FMCG companies Hindustan Unilever and Asian Paints reported their third quarter results. Now, it comes as a big mixed bag for analysts because Asian Paints missed the estimates on major accounts while HUL has reported numbers that were in line with what the street was expecting. Now, will FMCG stocks now shift into the fast lane, beating all those inflation woes? And will consumption drive India in the upcoming year? Let's get the experts to weigh in on this.
Yes, the growth rate between the discretionary and non-discretionary was higher. I think the gap is now bridging. But I would continue to believe that India's captive consumption, and given all these macroeconomic effect, which will be visible another 15, 20 days, what the government is taking a position. But I think I strongly, firmly believe the inherent latent demand, which is there, is here to stay. I think I would bet that the packaged food segments will grow ahead of all the segments. Now, to give you another angle, and when we look at the mass staple consumption in that, when we look at the likes of toothpaste category or hair oil categories is not picked up. And I would say the recovery in these two segments is little far away, maybe another a quarter or two away. But clearly, the trend suggests that if the IT is, it's a large segment of audience which generates a handsome income and they're still working from home. And if that mobility comes back working onshore, I think that is another quarter of consumption which is missing at this point of time, and that will drive the discretionary consumption as well.
Well, yes, and the company, or rather HUL, has reported its Q3 numbers. Let me quickly take it to Vinny, who's going to give us a grounded picture on what the numbers look like. Vinny.
HUL overall, the performance has been in line with estimates, whether revenues, profits or margins, all three were in line, and even the volume growth that has come in line with what we're expecting. 5% volume growth is what it's currently standing at. Revenue growth of 16%. So yes, this time also it's more of a pricing led growth. Do not forget they had taken some price hikes coming in terms of whether the detergent side as well as the soap portfolios where they're taken price hikes. Now overall they've seen a strong performance, solid performance across their segments, whether it's home care, skin care, BPC, food and refreshment, all these places they've seen a good growth coming in. And what the company is highlighting in their press conference is that they've actually started passing on the cost benefit to the consumers in terms of the tea and soap segment. So keep an eye out on that one. While one more update is that Unilever as well as HUL, the royalty, now the board has approved the royalty amount, and increase from the effective rate is going to be at around 3.45% of the turnover. Previously it was 2.65%. This is for a period of 5 years. It's going to be in a staggered manner that this increase is going to go in the next 3 years. The 80 basis point increase that we're seeing, that will be over a staggered manner in the next 3 years. So keep an eye out on that factor. That is an important one that you're watching out for as well. Management commentary, they're cautiously optimistic in the near term. They believe the worst is over in terms of inflation. Rural has bottomed out, and now we'll start seeing a recovery coming in. It's surely start showing signs of recovery coming in there as well. And main focus of the company is on a double-digit EPS growth driven by sales growth is their main focus.
Well, thank you for that, Winnie. Now, HUL has also hiked the royalty payment to Unilever effective from the 1st of February. Let's go across and listen into what the management's rationale was behind it.
When it comes to royalty, you must always look at it from a lens that, yes, this is an expense for benefits received.
To us, royalty, central services is a very important, necessary investment. Royalty is one of the element of cost like any other cost in the business, royalty and central services. So the way we see there are multiple costs in the system, there are multiple efforts of driving savings in the business, And of course, we have a big job in terms of driving portfolio. So rural, the way we see, if I look at current last 3 months for rural, the market has grown. FMCG market has grown by 5%. These are the numbers we were talking being flat and with a double-digit volume decline. What we now have, volume decline has been reduced. Now it's 7% volume decline for rural market, but value growth is 5%.
Well, and nifty big boy Reliance is expected to report its Q3 results. The street, of course, is expecting to see a surge in its profits, and that's led by improving footfalls. To shed more light on this, we have Somit, as always, to take us through what he believes or what the street sees as the expected numbers.
Well, if you're going to see on a consolidated basis, a decent set of numbers are expected. Revenues are expected to be down by around 5%, but the EBITDA is expected to be higher by around 8%. Margins are expected to come in higher at close to 15.5%, while the company's net profit is expected to be 17% higher on a sequential basis. Now, segment-wise performance, if you see retail segment revenue and EBITDA are expected to be higher by around 7 to 8%, purely on the back of increased footprint, increased footfalls, and operating leverage benefit. Also, expansion is one of the factors because of which the retail numbers are expected to be good. When it comes to the O2C segment performance, that is also expected to be higher by around 6%. That is the EBITDA number I'm talking about, and this is largely owing to the CEZ export tax removal. Export tax was removed over a special economic zone, and along with this, windfall tax was also relatively lower in the third quarter of FY23. Now, because of both these factors, the EBITDA is expected to be higher by 6%. And lastly, when it comes to the oil and gas exploration business, there the EBITDA is expected to be higher by nearly 22%, and this is purely on the back of higher gas prices in the third quarter of FY23, and also because of higher production numbers that are expected to come in the third quarter of FY23.
Well, that was the update on RIL, but what about Reliance Jio, Somit? The analysts are expecting the ARPUs to rise by 2%. So how is the telecom giant going to fare in the third quarter?
Now, specifically for Reliance Jio, if you see the company's revenue is expected to be higher by around 4%. But do remember, this is the slowest revenue growth for Reliance Jio in the last 7 quarters, owing to no tariff hike or lower ARPU growth, and also because of lower subscriber addition. Now, though subscriber addition is lower in the third quarter, this is the third consecutive quarter of subscriber addition that Reliance Jio is expected to report. The subscriber number is expected to be around 43.4 crore. Now, if you see the ARPU, that is the average revenue per user, and the key number for Reliance Jio, that is expected to be higher by only 2% because of some residual benefit of past tariff hikes taken by the company, and also because of upgradations in Reliance Jio's customer. Now, the EBITDA number, that is expected to be higher by around 6% because of some residual benefits coming in of lower spectrum usage charges, and along with this, marginal ARPU growth that is expected will also benefit the EBITDA. But the net profit growth, now that is expected to be lower compared to the EBITDA growth because of higher finance cost, and this is because the company had acquired more spectrum in the spectrum auction, because of which the finance cost for the company is expected to be higher. Now, the key things to watch out for from Reliance Industries and Reliance Jio earnings would be the company's, firstly, the net debt levels, their new investments that they're doing in the retail and the new energy business. Along with this, the company had announced the demerger of financial services. So what's the update coming in on that front would also be important to track, and what is the commentary coming in for ARPU trajectory, the growth trajectory that they're seeing for Jio Fiber business, how they're planning to monetize the 5G would be important to track from Reliance Industries and Reliance Jio earnings.
Well, also, JSW Steel all set to declare its Q3 results, and while lower volumes are expected to hit the top line, the overall spread is expected to improve quite sharply. Ashesha joins in with what to expect from JSW Steel's third quarter results.
For JSW Steel this time around, on a sequential basis, we are expecting the top line to contract due to lower volumes. However, improvement in margins due to lower coking coal and iron ore prices will aid profitability this quarter. Coking coal prices in particular are expected to decline by about $80 per ton, and iron ore prices are also expected to decline a whole lot, resulting in expansion in volumes on a quarter-on-quarter basis. Meanwhile, as far as realizations are concerned, steel realizations are expected to contract a tad bit by about 2 to 3% on a quarter-on-quarter basis, as they are expected to come in at about 59,000 rupees per ton. As far as revenue is concerned, we are expecting them to come at about 39,370 crores, a decline of 6% on a quarter-on-quarter basis. As far as margins are concerned, we are expecting an expansion of about 600 basis points on a QOQ basis. Talking about other internals, EBITDA per ton is expected to double on a quarter-on-quarter basis. It could come in at about 7,000 rupees per ton versus 3,500 rupees per ton that the company had reported in the previous quarter. Increase in EBITDA per ton is primarily because of lower coking coal and iron ore prices. All in all, revenues are expected to contract on account of lower volumes. However, improvement or expansion in margins is expected to aid profitability this quarter.
Well, do watch out for all the earnings on ET now. With that, we'll have to wrap up this show. You don't go anywhere. There's lots more action lined up on the market, which is on the other side of this show.